Welcome to today's video where we'll be discussing cryptocurrency trading strategies. Cryptocurrencies have become increasingly popular in recent years, with many people looking to trade them for profit. However, trading cryptocurrencies can be risky, and it's important to have a strategy in place to increase your chances of success. In this video, we'll be sharing some of our insights into the market trends and the best ways to trade cryptocurrencies, including technical analysis, fundamental analysis, and more. So, let's get started. Technical analysis. Technical analysis is a popular method used by traders to predict future price movements based on historical data. It involves studying charts and identifying patterns and trends in price movements. One of the most popular technical analysis tools is the moving average. This is a line on a chart that represents the average price over a certain period of time. Traders use moving averages to identify trends and determine when to enter or exit trades. Another tool used in technical analysis is the Relative Strength Index, RSI. The RSI measures the strength of a cryptocurrency's price action by comparing the average gains and losses over a specific period. Traders use the RSI to identify when a cryptocurrency is overbought or oversold, which can indicate a potential trend reversal. Fundamental analysis is another method used by traders to evaluate the value of a cryptocurrency. This involves analyzing the underlying factors that drive a cryptocurrency's price, such as its technology, adoption, and use cases. For example, if a new cryptocurrency is launched that has a unique use case, it may attract attention from investors and increase in value. Traders also consider news and events that may impact the cryptocurrency market. For example, government regulations or a major hack can cause the price of cryptocurrencies to drop. Keeping up to date with news and events can help traders make informed decisions and stay ahead of market trends. Market trends can also be a valuable tool for traders. By analyzing the overall direction of the market, traders can identify potential opportunities for profit. One popular trend-following strategy is the moving average crossover. This involves comparing the short-term moving average to the long-term moving average to identify when a trend is starting or ending. It's also important to consider the volatility of the cryptocurrency market. Cryptocurrencies are known for their high volatility, which can make them a risky investment. Traders can use volatility to their advantage by setting stop-loss orders to minimize losses and taking advantage of price swings to make profitable trades. In conclusion, there are many strategies that traders can use to increase their chances of success when trading cryptocurrencies. Technical analysis, fundamental analysis, and market trends are all important tools that traders can use to make informed decisions. However, it's important to remember that trading cryptocurrencies can be risky, and it's important to do your research and have a solid trading plan in place. We hope this video has provided you with some valuable insights into cryptocurrency trading strategies. Thanks for watching, and we'll see you in the next video.